What's up, guys? It's Ryan
And Neil.
from Premium Mortgage. We actually have a little guest here today, somebody watching us. But anyway, we have some bad news for you guys. It's going to snow again this weekend. So 3 to 5 inches. Hopefully it doesn't happen, but anyway. So today we wanted to talk about rate. Now, a lot of people, they ask us about rate, and they don't know how they get a certain rate or why people get higher rates or lower rates than others. So Neil's going to tell us a little bit about the 4 different key components to what influences rate.
I think we talked about this before, but the reason we're doing it again because it's so important. The most important thing when we give you a rate or when you ask for a rate is your scores. Your scores are going to tell us what rate we can give you where it makes sense. The next most important thing is a loan amount. The lower the loan amount, the harder it is to give you a good rate. Nobody wants to give you a good rate at a low loan amount because it costs them so much money. Next thing is term. The lower the term, 15-year term, of course you're going to get a better rate. And after that's points. Points, let me explain, is 1% of the loan amount. If you want to buy down your rate, it might cost you a couple points. Now, Ryan's going to explain that.
We're going to do this together. So let's just take a standard situation. If you have, I'm going to cut it off, an FHA loan, a purchase price of $200,000, with the mortgage insurance included, the loan amount comes out to being $196,571. Now, an average rate today is about
4.5%.
Your payment would be $416.62. If you buy down the rate, how much would it cost them to buy down the rate?
I just did the figures. Buying the rate down to 3.875, which is what, 5/8 lower. Your payment goes to $1,344. What are you saving? $70, but it's going to cost you 2 points on that $200,000 loan. That's $39.31. Is it really worth it for $70? Think about it. Do you know how many months it's going to take you to recoup that? What?
I don't know.
35, 40 months, 50 months? It's absurd.
And what can you do with that $4,000? Do you need new appliances for the house? Do you maybe want a fresh coat of paint? So it's just something to think about. Some people, they want to have a lower interest rate. Some people would rather have more money in their pocket.
Most people buying a house nowadays wants to have the lowest closing cost. The payment isn't that important as long as they qualify. You can always refi, especially in FHA. You can do a streamlined refi 7 months after in the loan. You can do it. We don't need anything, no docs, nothing. All we need is a copy of your mortgage, your original mortgage document, and a driver's license. That's all you need, as long as you're paying on time.
What's the average length of an average mortgage?
And most loans, on the government says, nobody stays in it more than 3 to 5 years. So you're not going to be in that loan. There's always things happen. Things happen in our lives where you'll refi, get out of it, or even sell the house.
Cool. That's it, guys. That's the message for today. Any questions, anything you want us to talk about, find us on Facebook, on Instagram. Give us your comments. Pick up the phone and call us. We'd love to help you out.
It's going to snow.
Have fun in the snow, guys. Thanks a lot.